get a move on then and put the spotlight on the tire industry. Talk a little bit more about what the rubber shortage means for the space, what the outlook is when it comes to volume momentum, and how some of the tire players really are placed at a time like this. Joining in to discuss the same, we have Rishi Vora. He's the Vice President, Kotak Institutional Equities, who tracks the space, as well as Rajiv Budhraja, who is the Director General, Automotive Tyre Manufacturing Association. Thank you so very much for taking time out and joining in. Let's get in a sense then. First up from you, Mr. Budhraja, as to what the outlook is when it comes to the overall raw material basket, the kind of cost increase that we've seen, and how this is really going to impact the tire industry.
Thank you. As you're aware, tire being a raw material intensive product, I think the raw material basket plays an extremely important role. And of those, natural rubber, as we know, is the most critical raw material. As it is, we have a very acute demand supply gap domestically to the extent of almost 40 to 45% with dependence on imports. But what has caught the industry unawares this time has been that starting January, February this year, calendar year, month over month, there's been a drop in the domestic natural rubber production. And this is something the industry wasn't prepared for, nor had, a plan B in terms of, contracting imports at this stage. So that has, in a way come as a big surprise. And the production domestically has taken a major hit, mainly because of the climatic factors and also, the shortage of tappers in the country. The domestic prices are at a 13-year record high. So we don't, the premise is that it is not the pricing which is holding the availability. Then, of course, there is an element of hoarding also taking place by the dealers and growers, which is, of course, adding to the woes of the industry. So this is the current scenario, very, very tight situation in terms of natural rubber domestic availability. And companies have contracted imports and they should be arriving now, second half of August. And I think that would open up the situation and the scenario would look better.
If that is the situation, which is the raw material issues are there and companies are hoarding up, then why tire demand is not going through the roof? Tire prices, I mean, prices in a shortage should ideally have gone up, Rajiv.
Well, see, this is an immediate sort of development. Normally, there is a lag, as you are aware. There could be a lag of almost a quarter, quarter and a half between the raw material price increases getting translated into the end product. I think that's the phase we are going through at the moment.
Let's get in your take on the overall assessment as to how you're reading into this raw material basket price increase, and individually, if you could break it down as to what your observation has been on margins of these companies.
Sorry, you are asking me?
Yes, Rishi.
Yeah. See now, as Mr. Rajiv highlighted that at least the domestic natural rubber prices has gone through the roof. Last 1 month, we have seen an uptick of anywhere between 20 to 30%, and also on the imported rubber price, natural rubber price, which we import from Southeast Asian regions. While the prices have cooled off from its top, but the issue over there is a freight issue where the freight rates have gone up. So the imported cost in India to that extent hasn't come down significantly. Now for companies to get back to their let's say 4Q level margins, they at least will have to take another 2 to 3 price increases, cumulatively summing up to anywhere between 4 to 5% to get to the 4Q levels. Now the challenge here is every segment has a different type of competitive intensity. While OEM and OEM is generally a pass through, so with a quarter lag, I think they will get those price adjustments. But in the replacement market, it will depend on how every player is behaving. And while in certain segments we are seeing some bit of pricing absorption is better, but in certain segments as of now there are also issues where certain players are being more aggressive than others. So net they'll have to take 4% price increase, and in the overall replacement segment, which as of now we'll have to see how how each player goes about it.
Rajiv, there seems to be a slowdown or early signs of slowdown in the auto market as well. I mean, especially at OEM level, we understand that waiting list is out. There is a problem in terms of what the discounts, where the prices is, discounts are kicking in. Do you think that also could be a factor which could influence tire demand, at least when it comes to the new tire demand?
Well, various categories, as Rishi mentioned, have demonstrated different level of sort of growth trends and patterns. A multi-axle CV segment definitely has seen a slower pace of growth, and which obviously means a reduction in the average tires per vehicle fitment. But we hope that, with the kind of infrastructure spend that the government has talked about and the budget has kind of projected, this will pick up soon, maybe perhaps in the second half. The tipper segment, as it is witnessing a very good growth, thanks to all these infra projects that have taken off. ICV segment is also seeing, more traction now. Buses, again, bus segment is doing better. The intercity operations, they are also gaining traction. So overall, I would say that LCV is largely flat. And as you mentioned on the passenger vehicle side, yes, there is an inventory buildup. And let's see how the festive season pans out, and if there's any pickup there and correction happens. Also, we've seen this very uncertain monsoon, which has played sort of, a kind of a spoil sport, both from the tire sector demand point of view. Generally, vehicles are stalled and they are not moving at, the expected levels. So all in all, I would say this quarter has been somewhat subdued, but we hope, second half should be more promising.
Okay, fair enough. Meantime, would you concur with that assessment, Rishi, in terms of what the long-term outlook could be?
Yeah, absolutely. Near term, obviously, in certain OEM segment, there are challenges. Replacement more or less is doing tracking okay, and hopefully in second half we should see a recovery. First half predominantly because of elections, heat waves, and now heavy monsoon in certain pockets had impacted the replacement segment demand. Yeah, our sense is also that second half should be better than first half. Festive would be the key, so we are also keenly monitoring that. But yeah, our expectation is that second half overall for the demand trend should be better than first half.
And thank you for taking time out and joining in, Mr. Budhraja as well as Rishi. Good to get an overall assessment of the tire industry and how things are shaping up, especially with the rubber price move.
If you like this video, then like, share and subscribe to ET Now.